Good morning. Welcome to the XM.com weekly market update. And we're joined again by Pete McGuire, the CEO of XM. Pete, good morning.
Good morning, Andrew.
Okay, some stats domestically. We got the retail sales number came out. It came in at minus 0.2, which was unexpected. They were expecting to be up about 0.5%. So interesting number there. And is that maybe the interest rate rises starting to work their way through the system?
You would think so, yes. And the impact to retail sales, as we know, and how we are only less than a month out from Christmas, and whether it's going to be a bumper year for them or it's going to be one that's in the doldrums. Time will tell, but it's weaker than expected, and that's not a good sign.
Yeah, it could pick up in the lead up, which obviously you tend to get that pick up pre-Christmas, but yeah, we're in different times at the moment, that's for sure.
You bet.
Now, this chart's an interesting one. This is a correlation between the Aussie dollar and the S&P, which it really tracks one another very closely.
Yes.
That's a 1 year chart right there.
Yeah, wonderful in the sense of what a trader would be after, and that would be, just you lay charts over one another, you get the mood, you see the correlations, and yeah, that's just a wonderful trade because you're seeing that US dollar, you're seeing the Aussie dollar naturally, and then the S&P 500. So yeah, thanks for that one. That's a cracker.
Now, just some commodity prices. It goes into the inflation story. Obviously, oil prices have come down significantly. They're fluctuating a little bit at the moment, but they're certainly off their highs.
Yeah, $76. I mean, they're weaker again in Asia trade this morning, and we're currently sitting at 82.58 for Brent. Funny enough, it's down 1.26, and what we're seeing here, WTI is up 1.26. Work that one out. 77.24. So yes, it's had a nice little pullback, and that's been good for the consumers. Not good if you're a producer, but that's the lay of the land, Andrew.
Yeah, it certainly is. And once again, one of the big commodities, copper, that's off quite a bit as well. And we know copper goes into a lot of different industries.
Well, exactly right. That's always been Dr. Copper, and it's a wonderful barometer for economic health. And there we are at the moment, $3.61 a pound of copper. If you're looking for a ton of it, maybe if you want to buy a ton of it, you'd have to pay 8,000 on the London Metal Exchange, or just about. So that really is, well off its highs, and we've seen that big correction to the downside over the last few months.
Yeah, certainly have. And finally, once again, in playing into the inflation story, the shipping rates, the freight index, that's off a long way, which hopefully that we start to see some bit of relief in those supply chain issues that were very much prevalent throughout COVID.
Yes, exactly. We've spoken about it, the Panamax and all of the big shipping and the containers crisscrossing the oceans, and cheaper freight costs are a benefit to consumers. So we'll just see if that maintains that momentum to the downside. It's really been crushed when you look at that over the last year, really well down and down significantly. You're down the best part from that high, about 75%. So we're coming to that trend line that we saw in, that early January to say January 19 and March 20, we're approaching that sort of level, Andrew.
Yeah. Now, inflation, once again, it's talked about everywhere. It's eased in the States over the last couple of months. The Fed and some of the board members on the Fed are still ratcheting up about higher interest rates, which I think is a given. Now, it just comes down to how high the next rate rise will be. Now, the inflation number is not out for a couple of weeks, but it's a toss-up between either 50 or 75 basis points higher.
Well, that's exactly right. They're talking, it's dovish sentiment from the Fed, but it's a mixed signal from the Fed because different members have different perspectives, which is normal, and they're all positioned across the vast landscape of the US, some on the East Coast, some on the West, some on the North, the South. So everyone's got a different perspective. And I notice now that it's a toss of the coin, Andrew. It's 50-50 as far as risk of recession in the USA. So that's where we're rolling into 23 with that sort of number. So it's going to be a tight one, and let's just see how we roll as far as economic numbers.
Yes. Jobless claims came out a bit higher than expected. So that might play into that story that those higher interest rates are now starting to sort of bite a little bit to the American consumer.
Yeah, exactly right. And we'll get those numbers always the first Friday of the month, and with those coming out, non-farm payroll Friday evening, our time, Friday, naturally New York or the the east coast of US, and we'll get that number dropping and how that trades and what impact it has naturally to equities, the Fed, and overall mood and sentiment. So I'm just noticing here you had the Dow down 1.45, S&P down 1.54, and the NASDAQ down 1.58. And that concern, I think, not only that, but the global situation and that ratcheting up since Friday, Andrew, of what we're seeing on China and the political instability across the whole nation due to lockdowns and so on.
Yeah, it's interesting out of China where the population is starting to do that, which is very rare, but you're right, a little bit unsettling. You mentioned the non-farm payrolls. Obviously, that's a big number that comes out later this week, along with a whole stack of other data. So that's a very important figure that they'll be looking at.
Yeah, you bet. You know, it's one that we live and breathe by as far as currency traders, and it sets up the month. And this is the last number for the year. Who can imagine? You know, we're nearly in December already, and the close down phase of November. So the years go quick, or the weeks go quickly, Andrew, and unfortunately the years go quickly. So let's see how we roll for this Friday, and then the lead up naturally over Christmas.
Yeah, it's certainly been a pretty wild 2022. You don't get too many years like this very often, so it's one for the history books.
You bet.
Finally, once again, just a snapshot of some of the G20 countries and their inflation rates. Obviously, yes. Turkey is out of control around that 80% plus, which is just an unbelievable sort of number. But you look at all the other numbers there, up around sort of 8, 9, 10, and they're all heading in one direction. So it's a really good snapshot, I think, of what's going on globally at the moment.
Yeah, you bet. You know, we spoke about that a little while back as far as those high rates coming out of Turkey and Argentina a few months ago. And yeah, the storyline, it'd be frightening to live under those conditions. It just must be, you can't imagine it, Andrew.
No.
And then, sorry, go on.
Yeah, no, it makes the 7% here look like a walk in the park.
It certainly does. Yes, exactly right. So let's see where, if we get that, and as we mentioned earlier, you know, the shipping costs are being crushed. Your energy prices are well down. If that continues, that momentum and softness, then that's certainly going to help that headline inflation number. We've just got to see how quickly it is to turn it around.
Yeah, and I think, like we've spoken about before, like they can probably get it down to sort of maybe 4.5%, 5% fairly quickly over the coming months. So I think the tough bit's going to be getting it down to that 2 to 3% range. I think that's going to be a much harder task for a lot of the central banks.
Yeah, I think you're right. And anyway, they've got their job to do, and let's see how they do it. But the wild card certainly at the moment are geopolitical concerns coming out of China. And if that, I mean, this is very new. It's only happened since Friday. So it's not as though we've got, you know, months of discussion on this. It's a matter of days, and how equity markets are going to trade across Asia today. They were down yesterday. It was a mixed bag, but certainly China was down and Hong Kong. So let's just see if that momentum continues. It's big news items when you're looking at, you know, global press and the likes of your old mates at Bloomberg. You know, it's just it's going to be interesting, Andrew.
Yeah, time. It's certainly the next couple of weeks, and just how the China government actually reacts to all this as well. So watch this space. All right, that's great. Thanks for joining us again, Pete.
Well, lovely to see you, and we say goodbye to November, and we welcome December next week.
Excellent, good stuff. And that's the xm.com weekly market update.